Are you having a hard time getting a mortgage in Edmonton right now? If that's the case, then have you heard of private lenders? Private lenders are lenders who can secure mortgage financing for you in Edmonton when traditional banks can't do it. Now, the traditional banks have their set rules and regulations, and if you don't fit into their square box, you're stuck. Now, a lot of investors deal with the banks and they end up having to deal with private lenders because they just get too much property and it goes beyond what the bank will allow. And all of a sudden, they'll say, no, even though you have money, even though you have good credit and you have all of these things, you cannot get approved. A private lender will approve those people. A private lender will also approve you if you have bad credit. So it's something that you really need to know. If you have bad credit, you think that there's no hope for getting mortgage financing, then a private lender may be the route for you. People that have gone through bankruptcy, people that are not from Canada themselves, these are all financeable through a private lender. If you have weird land or a weird corporation or building a house and have bad credit, then a private lender is who you need to deal with. So in this video, I'm going to explore how to get a private mortgage, who you should be dealing with, what the interest rates are like on private mortgages, what the risks are of dealing with a private mortgage company, and much more. So stay tuned till the end of the video to find out all you need to know about private mortgages in Edmonton now. So what is a private mortgage? A private mortgage is a mortgage on a property. It could be any type of property that is outside of what traditional lenders allow. So private lenders could be anybody from a mortgage investment corporation or from a person itself. So myself, for example, I have given loans out on private mortgages under the right circumstance for a profit. So a private lender could be a person or it could be a company. And interest rates will vary. Of course, the interest rates with most companies will be lower than the interest rate through a private person. But really, anybody can be a private lender if they have some cash to spare and they're doing it for a profit. Now, one of the good things about these private lenders is that they only take into consideration the property and the amount that you're putting down. They're not caring about credit. They want to ensure that their asset is protected and they can get their money back in the form of resale. Private lenders look for almost the same type of paperwork as a regular bank, but you don't have to have your taxes complete with a private lender. And I know a lot of business owners will wait to file taxes until July. A lot of them after July, but private lenders will fund those people. They don't need the taxes paid, and they need a lot less paperwork than a traditional bank requires. So they're definitely going to be asking for an appraisal on the property, like most banks would anyway, because they want to make sure that the asset is worth the value of the property. They're going to look for proof of income. So they're going to look for an employment letter or bank statements to prove that you have consistent income coming into your account. They're going to look at your credit, of course, and they're going to look at the repayment history. That's going to determine like whether you're going to get a good interest rate or a higher interest rate. Of course, people with worse credit are going to get a much higher interest rate. They're going to look at the mortgage application that I'm going to present to them as well. Of course, when I present you to a private lender, you're going to be presented in the best light possible because I do know what the private lenders are looking for. They're going to look at proof of down payment. Where's the down payment coming from and how long have you had the down payment for? Just like a regular bank would, but they will not scrutinize you as bad as a regular bank. And they're going to look for government ID. So basic stuff. They want to know that the asset is worth or the house is worth what you say it's worth or what your real estate agent says it's worth. And then they're going to want the paperwork to back up to prove that you can afford the monthly payments. One of the cool things that I've done with private lenders in the past is I've built in a year worth of payments. So I had a customer who needed about a year's worth of credit repair before I could take them to a regular bank, but they really wanted this property. So they put their down payment down. I got them approved through the private lender. And then I was able to take them 1 year later into a regular bank and get them approved. And I built in 1 year's worth of payments for them so that they don't have to make any payments for the 1 year. I could do a 1 year, I could do 2 years, no payments, whatever you prefer. You let me know. So let's talk pros and cons. Pros, they're very flexible. So they allow you to do a lot of things when you're dealing with a private lender versus a bank. way faster approval process. Like if you need to close a deal in 2 days, you can deal with a private lender and get that baby done. So if you're in a competitive situation, banks can't do it. They take weeks. You're going to want to deal with a private lender to close that transaction. They're great for investors. They're great for commercial properties. They're great for raw land. They'll take any of those clients on. You can invest in a private lender as well. So where do they get their money from? They're getting it from people like you and me. And you can invest in those companies for a guaranteed rate of return. Now, some of the cons of private lenders is, of course, they have a much higher interest rate than a standard bank. They need to make money for their investor. They're taking on higher risk, and they need to make money for their company. They do shorter term loans. They don't like to do the 5-year terms like the regular banks do, because the idea is you need to be able to get out of that private loan and get into a regular bank. You have to have a strategy, and you have to present the private lender the strategy. Call me and I can help you build that strategy before we present you to a private lender. And there can be lender fees, and ranging from anywhere from 1% all the way up to 4%. So private lenders do charge fees. If you are a higher risk person, your fees will be higher. And that's because the investor requires more fees and possibly a higher interest rate as well. Now, these private lenders, they can really, really range in fees. I have private lenders right now that are as low as 5.5% for fees, for interest rate, and as low as 1% for fees. But, they won't do every deal. And some deals I have to take to a different private lender. When I have to do that, the fees can be and the interest rates can be as high as 12%. So depending on how bad your situation is, the location of the property type, a private lender will be for you. And there are tons of private lenders in Edmonton. You have no idea. There's probably 40 different private lenders right in Edmonton right now at any given time. And what I do in the background is I go and shop all of those private lenders for you. And I'll go and shop around at private lenders cross country for you to see who will buy this the cheapest. The best way to get a private mortgage is by calling us and letting us shop around for you. You're going to have a hard time finding all of the private lenders that are available out there. And I really grind them down on the rates. Now, in 2025, the private interest rates are ranging anywhere from 7 to 12% for the majority of them. Like I said, I found one as low as 5.5%. Broker fees are anywhere from 1 to 4%. And then lender fees also are anywhere from 1 to 4%. So who should get a private mortgage? Who should even consider dealing with one of these private lenders? First of all, if you have bad credit. If you know your credit's bad, don't bother going into a regular bank. Like if you're under 600, don't even walk into a bank. Call me first. I'll try to fit you in wherever I can fit you in. And I'll talk to a whole bunch of private lenders for you. Bad credit, private lender. People that are newly self-employed. If you're newly self-employed, but you've got all of this revenue coming in the last 6 months, then you should definitely be dealing with a private lender. Your standard bank is not going to finance you until you've been at least a year and a half self-employed. Obviously, real estate investors should deal with private banks. The reason real estate investors deal with them is because they cap out with standard banks. They get to so many properties, and then the bank will stop lending them money. At that stage, they have to move over to the private world and get a private loan. And people that want like fast financing. If you need really, really fast financing, then a private lender is for you. Now, that being said, I did have a customer recently. He inherited a bunch of money. He didn't have a job. He was able to put a huge down payment on a private loan, on a property, and I was able to get him a private loan. It was fantastic. So if you do not have a job, I can still get you a mortgage through a private lender. So step by step, how to get a private loan. Number one, you're going to want to call into me and let me take your application over the phone. After that, I'm going to tell you what documentation you're going to require. Then I'll pre-approve you and I'll send you a pre-approval letter. After that, you can go shopping for a property with your real estate agent or by yourself or whatever you want. Pick a property out, write the offer on the property, bring the accepted offer to me, and then I will go to the private lenders and get you approved for that mortgage. And like I said, I'll do the shopping around for you so you get this done fast. Overall, private mortgages can be right for the right person. It's definitely not for everybody. If you don't need to go with a private lender, then absolutely don't bother going with a private loan. But if you are in one of the scenarios like I talked about earlier, then you should be calling on me and letting me shop around for you for a private loan. Private lenders can be great. They have good reviews online, but there's a lot of them that have really bad reviews. I mean, there was a private lender the other day that I had and took advantage of a handicapped person, and I called on them, and I was harsh to this lender. I don't think they'll ever speak to me again. But that's because it's coming from private people sometimes. If you want to deal with a company, a private bank, then that's probably the way you should go. In my opinion, don't take money from private people unless you're really, really understanding the terms and conditions of the loan on paper, signed. So call me if you're getting a private loan. I'll make sure you don't get screwed. Thanks for watching. Like and subscribe.